He built a religion. He convinced the world's smartest investors that a simple office rental business was a technology company worth $47 billion. He raised billions from SoftBank, the largest technology investor on the planet. He had celebrities, politicians, and Wall Street lining up to be part of his vision. And then, in a matter of weeks, it all fell apart. This is the story of WeWork, the most spectacular startup collapse in modern business history, and the man who made it happen. Adam Neumann grew up in Israel, served in the Israeli military, and moved to New York in his mid-20s with almost nothing. He had enormous energy, extraordinary charisma, and an ability to make everyone around him feel like they were part of something bigger than themselves. In 2010, he co-founded WeWork with Miguel McKelvey. The concept was straightforward: lease large office spaces, divide them into smaller shared workspaces, and rent them out to freelancers, startups, and small businesses at a premium. It was essentially a real estate sublet business dressed up in millennial branding. But Neumann had a gift. He could walk into any room and make people believe they weren't just renting a desk. They were joining a movement. WeWork's mission statement was to elevate the world's consciousness. Employees were called members. Offices had beer on tap, meditation rooms, and inspirational quotes painted on the walls. It felt less like an office and more like a cult. And investors loved it. By 2014, WeWork was valued at $1.5 billion. By 2017, $20 billion. By early 2019, SoftBank's Masayoshi Son had poured billions into the company and valued it at $47 billion, making it the most valuable startup in America at the time. But here's what most people don't know about how that valuation happened. Masayoshi Son, the founder of SoftBank and one of the most aggressive technology investors in the world, met Adam Neumann for just 12 minutes before deciding to invest hundreds of millions of dollars. 12 minutes. Son later said that in that meeting, Neumann showed animal smell, the instinct of a true visionary. That single meeting began a relationship that would ultimately cost SoftBank billions. The WeWork business model had a fundamental problem that no amount of branding could fix. WeWork signed long-term leases, often 10 to 15 years, on office buildings. Then it rented those spaces to members on short-term flexible contracts, sometimes month to month. This meant WeWork had enormous fixed costs locked in for years, while its revenue could disappear almost overnight if the economy turned or members left. It was a classic real estate arbitrage model, but Neumann insisted it was technology. He called it a tech company in every interview, every investor meeting, every pitch. And for years, investors believed him because the story was so compelling and the growth was so fast. Between 2016 and 2019, WeWork's revenue grew from $436 million to $1.8 billion. It was expanding to cities around the world. It was acquiring companies, launching schools, building apartment complexes. Neumann's vision seemed limitless, but the losses were growing even faster than the revenue. In 2018, WeWork lost $1.9 billion. In the first half of 2019 alone, it lost another $900 million. The company was spending nearly $2 for every $1 it brought in, and it was burning through cash so fast that it desperately needed to raise more money, which is why it decided to go public. In August 2019, WeWork filed its IPO prospectus, the document that companies publish before listing on the stock market. It was supposed to be the moment that validated everything. Instead, it became the document that destroyed everything. Investors and journalists read the prospectus and couldn't believe what they were seeing. Neumann had trademarked the word "we" personally, and then sold the trademark back to his own company for $5.9 million. He had borrowed hundreds of millions of dollars from WeWork while simultaneously being its CEO. He had sold company shares worth hundreds of millions to buy personal real estate, a private jet, and a stake in a wave pool company. He had structured the company so that his shares carried 20 votes each compared to 1 vote for regular shareholders, giving him virtually unchallenged control. The prospectus also revealed that WeWork's losses were so severe and its business model so dependent on cheap debt and cheap real estate that most serious analysts couldn't figure out how it would ever be consistently profitable. The reaction was immediate and brutal. Analysts who had been praising WeWork for years suddenly questioned everything. The IPO valuation collapsed from $47 billion to $20 billion, then to $15 billion, then lower. Eventually, WeWork was forced to withdraw the IPO entirely. Within weeks, Adam Neumann was pushed out as CEO by his own board, pressured by SoftBank, which was now desperately trying to protect its investment. Neumann walked away with a package worth nearly $1.7 billion, a golden parachute that outraged employees who had given years of their lives to the company and were about to be laid off. WeWork laid off 2,400 employees, about 20% of its workforce, in November 2019. The perks disappeared overnight. The beer taps ran dry. The inspirational quotes felt hollow. The movement turned out to be a real estate company that had run out of money. SoftBank was eventually forced to take majority control of WeWork and inject billions more just to keep it alive. By 2023, the company that had once been valued at $47 billion filed for bankruptcy with debts it could no longer manage. The total destruction of value, from peak valuation to bankruptcy, was one of the largest in startup history. So, what really happened at WeWork? Was it fraud? Was it delusion? Was it just bad business? The honest answer is that it was all three at once. Neumann genuinely believed in his vision. The chaos, the grandiosity, the messianic mission weren't just marketing. He truly thought he was building something world-changing. But belief doesn't pay the rent on 600 office locations across 120 cities. The investors who poured billions into WeWork saw what they wanted to see. SoftBank had just made a fortune on Alibaba and was desperately looking for the next transformational bet. Neumann was the most convincing storyteller in the room, and the numbers were growing fast enough that asking hard questions felt like missing the opportunity. And the board failed completely. They allowed Neumann to borrow from his own company, sell its trademark back to it, and accumulate unchecked power for years because the valuation kept rising and nobody wanted to be the person who slowed it down. WeWork is the defining startup story of an era when story mattered more than substance, when charisma was mistaken for strategy, and when the sheer speed of growth convinced everyone to look away from the numbers. The office buildings were real. The desks were real. The coffee was real. But the $47 billion was always a story. And like all stories built on belief rather than fundamentals, it ended the moment people stopped believing. Subscribe for more corporate collapse stories every week. New case study coming soon.